to another installment of the Wealthy Wallet Wall Street course. Please, if you find this information to be very valuable to you, please don't forget to hit that subscribe, like, or follow button. Again, if you find this information to be valuable to you, please hit that subscribe, like, or follow button. But let's go ahead and jump right into it. Today, I want to talk to you about how to make millions trading cents and dollars, because every day things like GameStop doesn't happen. I know GameStop's been everywhere. It's been on the mainstream news. It's been everywhere because it's a stock that has literally a company that was potentially about to go bankrupt. All of a sudden, stock goes from $17 all the way to 300, high 300s, and even into the fours. That doesn't happen every day. That's called a lottery stock, and lottery stocks like that don't happen every day. Things like that don't happen. I don't want to dig too far into it, how that stock went up that far, and why it went up that far. Because this episode is about helping you to literally turn cents and dollars into millions, or into thousands. But it can that doesn't have this things like this don't happen overnight. This takes time to learn how to build this momentum up. But you can easily do this in 6 months to a year. You can literally turn cents and dollars into hundreds of thousands of dollars in a matter of 1 year. And so, how do we do that? We got to learn to do that by learning how to find the gap. Every stock has a gap. Every stock has a pattern of behavior. And today we're going to study those patterns of behavior, and we're going to learn how to find uh, those stocks with certain behaviors. So what is a gap, and how do we find the gap? But in order to find the gap, we have to understand what the gap is. The gap is a range between whether stock price always falls and whether stock price always rises. So if a stock falls all the time, if we study the behavior of a stock and we understand that the stock always falls to $31, but it never goes actually below $31, and it rises to $33, but never eventually goes past $33, then we call that a $2 gap. So if you were to buy 1,000 shares of that stock that goes from 31 to $33, and when you buy it when it goes to 31, and then you trade off of it at 33, you just made a $2 gap move, right? So that $2 times that 1,000 shares you have, that becomes $2,000, right? With very little to no risk. So if you jump in the stock at support, remember we talked about support and resistance in about 3 or 4 installments ago. But if I jump in the stock at $31 and I ride the stock to $33, I just literally made a $2,000 profit off a $2 move, right? And these things happen in stocks every day, all day. We can go even bigger. I mean, even smaller. I mean, there's so many stocks that have 50-cent moves, 30-cent moves. Stock. If you go get a $5 stock and you buy, 2 or 3 thousand shares of the $5 stock, and if it moves 5 cent, 10 cent, 15 cent, that literally can pay you thousands of dollars off a few cent moves. So how do we find the gap though? How do we find these gaps where we can find 10-cent moves, 25-cent moves, 50-cent moves? Well, there's something called stock scanners. And what are stock scanners? Stock scanner is a screening tool that searches the market to find stocks that meet a set of user selected criteria and a matrix for trading and investing. Scanners can be modified to find the most suitable candidates that meet your specific filters. Let's say it again. A stock scanner is a screening tool that searches the market to find stocks that meet a set of user selected criteria and a matrix for trading and investing. Scanners can be modified to find the most suitable candidates that meet your specific filters. So, me personally, I use Thinkorswim from TD Ameritrade as a scanner to screen my stocks, or I use FinViz. FinViz is also another great tool you can use, but I want to direct your attention to yahoo.finance.com. Yahoo Finance is a great free tool for screening stocks. And so let's jump over to Yahoo. All right, so let's jump over to all right, so we had Yahoo, right? So you go to Yahoo, you tap on screener, and then you want to create your own new screener or scanner, whatever you want to call it. Let's go. So create a scanner. So it has small cap, mid cap, large cap, and mega cap. Some of y'all might be like, "What is that?" Well, let me explain to you real quick. Let's go over here. So what These small caps, mid caps, and large caps, they are called market caps. And market caps just stands for market capitalization. Market capitalization refers to the total dollar market value of a company's outstanding shares of stock. Commonly referred to as a market cap, it is calculated by multiplying the total shares of a company's outstanding shares by the current market price of one share. As an example, a company with 10 million shares selling for $100 each would have a market cap of $1 billion, right? The community uses these figures to determine a company's size as opposed to using sales or total asset figures. So, for example, again, if a company has 10 million shares, right, and those shares are selling for $100 each, we know that company has a $1 billion market cap. So let's go into explaining market. Now that we understand market caps, let's make sure we understand what a small market cap is. So small market companies typically have a market capitalization of 300 million to $2 billion. So a company, ranges around 3 billion and under is a small cap company. It's a small capitalization company, right? So if we find a company that has a market capitalization of 3 billion, 2 billion or less, or you find a company that has a $500 million market capitalization, we know that's a small cap company. And these small cap companies have usually been around for a short period of time. The advantage of investing in small cap stock is the opportunity to beat institutional investors through growth opportunities. Example, Papa John's is a small cap company. And Plug Play started off last year as a small cap company, right? But then it's now a mid cap company. So what is a mid cap company? Mid cap companies generally have a market capitalization of between 2 billion and $10 billion. Mid cap companies are established companies that operate in an industry expected to experience rapid growth. Mid cap companies are in the process of expanding. They carry inherently higher risk than large cap companies because they are not as established, but they are attractive for their growth potential. Example, Plug Power. Remember, I told you started off as about a year ago, started off as a small cap company and has now grown itself to a mid cap company, right? And Plug Power literally is doing a great job. Where the industry is going as we're going green, but I don't want to dig too far into Plug Power, but Plug Power is an example of a company that went from a small size company, and before the institutionals started taking a look at it, people jumped in at around $2, and those people who jumped in at $2 before institutionals got a chance to start buying. I literally made thousands of dollars literally in months. I mean, shoot, just last year. I mean, right now the stock is sitting at $66. In less than a year, it's grew tremendously. So if you would have jumped in at $2 and you had, 1,000, I know people who put literally $1,000 into it, and $1,000 is turned into 25,000 literally in about 6 to 8 months. So companies that are mid caps, I mean, this company is going to do nothing but continue to grow. I expect to see the stock over $100 pretty soon, but it started off $2 less than a year ago, right? So, but let's go. Okay? So then we move on to a large cap company. A large cap or a big cap companies typically have a market capitalization of 10 billion or more. These large companies have usually been around for a long time, and they are major players in well-established industries. Investing in large cap companies does not necessarily bring in huge returns in a short period of time, but over the long run, these companies generally reward investors with a consistent increase in share value and dividend payments. An example of a large cap company is IBM, Johnson & Johnson, and Apple, which they all pay dividends. Dividends is what they pay. Again, dividends is what a company pays you to own its stock, to have a percentage of its stock, right? So if you buy the stock, so if you own 100 stocks, these companies will pay you a portion of their profit every quarter. Every quarter they will pay you a portion of the profit every quarter for you owning those 1,000 shares or 100 shares or 200 shares, or you can even own 5 shares. It don't mean, but we're going to talk about the dividend. We're going to talk about the drip. Y'all don't even know what that is right now, but we're going to talk about that in a later segment, in a later installment. But for right now, I want you to understand, like Apple, Johnson & Johnson, these are mega cap stocks because these are companies worth over 10 billion. And Apple can also translate into a mega cap because it's literally over $1 trillion. So mega cap with over 1 trillion. This makes Apple also a mega cap company, not just a large cap company. Okay, so now that we understand what market capitalization is, let's go back to yahoofinance.com. Remember, you click on screener, create new screener. Now that we understand what small cap, mid cap, large cap, and mega cap is, let's go ahead and select mid and large. Let's select and remember, here's where you get your prices. So if I want stock that's greater than $50, then I'll type in $50, right? But if I want to see stock less than $50 with a mid cap and large cap market, or equal to $50, or between, 50 and $60, but let's do less than. We're going to do less than $50. I want to see mid cap stock and large cap stock less than $50. And let's see, do I want to do it? And these are the different sectors, right? We got the basic material, financial services, consumer defensive, utilities, energy, healthcare, real estate. What industry do I want to go in? Let's go into technology. Let's look up technology because technology been popping lately. Okay, and let's go into certain categories of technology, right? I don't want to select any categories. I want to do them all. So let's go find stock. Okay. So look what I just did. So I selected, I want it all in the United States. I want a mid cap and large cap stock, right? We know what mid cap, mid cap is any company between 2 billion to $10 billion. And we know large cap is between 10 billion and plus. And mega cap is between 100 billion or more, right? So let's go there, and then we want to go into our sector, technology sector, and then we don't want to pick a specific category, so because I want them all, right? And then, but if you want a specific category, like say if you want to search only technology companies that do solar, or that produces consumer electronics or computer hardware, you can type those in, right? But I want stocks, and then I want these stocks to be $50 or less. So then I did that, and I hit find, right? Now I got this. Okay, let's select Palantir, right? Then we go to the charts. Let's make it full screen. We want to go about 1 month out. So you look up here, pick 1 month, 3 month, just 1 day, 5 day, 1 month, 3 months, 6 months, year to date. We go out 5 years, right? Right here, we're just going to pick 1 month. And we're going to do, because we want the candles to be in 5 minute increments, right? 5 minute increments, so we can see. Let's zoom in. Zoom out, so we can see. Okay, that's about good enough. Let's do all the way to the 25th. All right, so then you go here, and it gives you the drawing. You want your tools to be able to draw. So then we go to trend line. All right, so let's see what the stock's been doing since the first of February. So I want to draw a trend line. This is about where support is, right? So let's start. This is about where support has been at. So I want to draw a line. Let's start right here. Since I know this stock from the first, let's draw this line. Right here, this is my support line, right? We talked about that, right? Support line. Let's draw another line right here. It's about resistance, right? Continues to give multiple touches. So look, so I got a gap between $30.20, right, to around $30, 35.50, right? So $30.20 minus 35.50, we got a $5.30 gap. Okay. And then not only that, let's add our indicators. Remember, we talked about those indicators. Let's just add two indicators. Let's add the MACD. We talked about the MACD last week. If you don't remember what the MACD is, go back and listen to 2 weeks ago installment. It's the installments on indicators. And let's start the RSI. Remember, we talked about relative strength index, the RSI. Okay, we always want to buy stock, never above 70. We want to catch it on a downtrend, which is below 30, right? But 56 is good because it's not overbought or oversold, right? And then we look at the MACD, right? If we were to zoom in, we'll see that this stock is about to be back on an uptrend because the MACD is going back up, right? So if you forgot, remember we talked about MACD. So if you forgot what the MACD is doing, so look, it crossed over the line. So I'm looking at the MACD right here, right? The MACD is starting to cross back over the signal line. So that means the stock is about to go bullish. The RSI is telling me the stock is on its way back up, and the value at the close is telling me that the stock is shooting back up. So it helps me to understand one thing is it's time to jump back in this stock and trade the gap, right? But let's say you got in down here, right? Just what, 4 days ago? 4 days ago, the stock was at its low, $30, $30.90, right? And I noticed the pattern of the stock. You notice the behavior. It never really ever falls below $30, right? It's been trending that way. It's been going up. And so I'm gonna jump in about right here because look what the RSI tells me. Boom. Look, the MACD is telling you it's crossed over. It's about to be back on an uptrend. The RSIs tell you the stock is oversold. Too many people are selling it, right? And the MACD is telling you it's on its way back up. And the RSIs tell you that it's oversold. So it's time to jump back into this stock, right? Boom. So you jump back in here on the low, right at support, and you're gonna start riding that support up, right? Because if you go across here, you'll see support. Boom. The stock has not went below support, right? So let's draw another equal line. I think we're about right here, right? Let's draw it back. So we got this whole support, right? It's not going below it. So if I understand the behavior of the stock and I know resistance is right around here, let's move up here, right? Now, no, resistance is right around here. Why would I not jump in this stock? Why would I not trade this? Look at this gap. This is a great, amazing gap. Look, the stock was up, then it fell back down. It didn't go below support. So that's what it showed you. Even if this stock currently showed you, it went down, but it did not go below support. Just so you didn't even jump. You just say you was a little scared to jump in. So you didn't jump in right here, right? Instead, you waited even another day, right? And you missed some moves. You waited another day, so you figure out, okay, boom, the stock is not going back down. You finally gained the conviction enough to understand that this stock is on its way back up. It didn't break support, right? It didn't go below support. Instead, it says, no, I don't want to go down. I want to go up. So it shoots. So you jump in right here, right? $32. And if you would have jumped in at $32, you had enough conviction that says it tells you that it's on a rise, right? So boom, you jump in at $32 and you trade the gap. When the stock gets here, you sell, right? You sell. You see first you see if it breaks support and break resistance and see if it holds resistance. But if it doesn't hold resistance when it goes back down past that line, it's time to jump out of that stop. Why? Because you just traded the gap. So if you got in at 32, and you sell at 35.50, you just made a $3 trade. So if you bought a thousand shares of this, right, 1,000 shares of Palantir, and you sold when it got to its resistance level, that's a $3 move, $3 gap, and you bought 1,000 shares. 3 times 1,000 is $3,000. So literally, you would have got right if you would have got in at 32. Right now, the stock's at 34.04, right? You would have already made $2,000 on this trade, right? If you would have got in right here because you understand the behavior of the stock. The best way to the best way to predict the future is to take a look at the past, right? So we took a look at the past of this stock. We know where support is, and we know where resistance is. We know the closer we can get in resistance. I would have literally jumped in right here. I would have literally already, which I have, but trading options on it, and not even stock. I've traded options on it. So, but look, well, I would have jumped in right here. Let's follow the behavior, right? I'm not selling. I'm not selling. I'm watching it. Let's see where it goes. Let's see. Of course, I put my stop loss on about 10% below where I jumped in at, right? Because I don't want to. I don't want to lose too much money just in case the stock decides they want to go down, right? So you put. We're going to talk about stop losses and all those beautiful things coming in the next installments to come. But over here, you trade the gap. You find a stock. We found the gap of Palantir. So now it's time to trade this gap. We know there's a $5 gap. I know the closer I can get in this stock around $30, the better off I'm going to be because I'm going to ride it back up to $35, $36. So if the closer I can get in at 30, the more money I'm going to make. This is called trading the gap, folks. And this is how you begin to trade the gap. So this is how we turn cents and dollars into millions. We learn to trade the gap. And just like I showed you on Yahoo.com. Let's go back. Let's see. Just like I showed you on Yahoo.com. Let's go back to it real quick. Remember, go back real quick. Let's go back. Remember, in order to find these screeners, you go to screener, create new screener. We understand what's small. If you want to dibble and you don't have a lot of money, you're below 2,000, you probably want to dibble in small and mid cap, right? And then we want to find stock that's less than $10, right? Less than $10. And look, boom, it pulls up all these stocks that are less than $10 for you. And now all you got to do, again, is pick one. Let's look at the charts. Remember, Yahoo gives free charts. The chart's not available on this one, so let's go to another one. Remember, Yahoo gives free charts, right? Let's see. Let's look at full screen. Now let's go 1 month out, right? And we go to 5-minute intervals and we expand it. And now let's look at the behavior of this stock, right? Same thing. We trade the gap. This support is around 875. And seems resistance seems to be around 909. Around 912, right? So we're looking at around 870 to about 912. So it gives us about what? A 42-cent move. So about 1,000 shares of this stocks, right? About 1,000 shares, 1,000 times 0.42, it gives me $420. So if I buy 1,000 shares of this stock at about 870, and then when it reaches to about 912, I punch out, right? I'm buy at 870. When it reaches 912, I'm jumping out. Again, I could do this. We can find stocks like this all day long. But we're going to check the fundamentals and want to know because we also want to do fundamental investing, not just technical analysis, but also fundamental analysis. But we're going to get into that later. But always make sure the company read the news before you jump into any stock, always, because we don't know if this company is on the verge of filing bankruptcy, because you don't want to be trading a gap on a company that's on the verge of filing bankruptcy, because it's going to take literally the stock down below $1, even if, and then probably zero if it's just survive, if it doesn't survive at all out of bankruptcy court, right? But you definitely want to always do your DDD. Just don't jump in the stock, but easily trade the gap on this, and we can keep going back. We can find gaps all day. Remember, then find out what industry that you really like and what you're knowledgeable about, and we can continue to find the gap on all these stocks. But this is easy, guys. There's so much easy money out here for you to make, but you just got to start jumping into it and taking your time. Making money in the stock market it's not a get rich quick thing. It's literally time and study, whatever time. If you put very little in time into the stock market and trading, the stock market is going to it's going to chew you up and spit you out. It really is, because you can't jump on these waves where all of a sudden you see these stocks, like people who jumped in at GameStop at $300 thinking, it's going to go to 1,000. These people lost plenty of money. And it's sad to see that. I was seeing stories where people were taking their college tuition money and sticking it into GameStop and this is going to go to 1,000. Man, these people, I saw where people were taking their parents' credit cards and taking money off their credit cards just to throw it into GameStop. Those people are going to lose millions of dollars. Thousands. People have lost millions. And those college kids that threw their money into it, and some people threw some of their life savings into it. Man, I feel very bad for those people. Yes. So you can't just ride the momentum or the wave or something. You got to know exactly what you're jumping into and when you're jumping into it. Remember, the goal is to make money, not lose money. And the goal is to win more than you lose. And the best way to win more than you lose is just to trade the gap. Never ride the hype. Never ride the hype. Trade the gap. That's it. That's all you got to do is learn to trade the gap. Do not ride the hype. Do not ever ride the hype. But don't forget to subscribe, follow, and like. Please, if you find this information very valuable, especially if you learned something today about learning how to trade the gap, learning how to turn, cents and dollars into millions, it can happen. I watch people do it every day. I watch myself turn, a few cents and a few dollars into thousands. I mean, I literally did it on CCIV today this week when it dropped down to $29. I know the stock had a behavior of going to 27 to $34. And so guess what? I did. I traded that behavior because at the end of the day, I know that the number one predictor of the future is past behavior. So I know that the behavior of this stock is always going to go to 27. Is going to run back up to about 34, 35. Why not? So, you bought 400 or 500 shares, boom, you're going to easily make 2 or 3 grand off a few dollars. And it happens all the time. So if you got $200, then look for small market caps that are $5 and less. They got stocks that are $5 and less and buy 1,000 shares of those. And when it moves 5 cents, if it moves 10 cents, you move 5 cents on 1,000 shares, you make $50. You see what I'm saying? The goal is to make money every single day. So work on trading the gap and don't get caught up in the hype of certain stocks. Trade the gap. You know what the gap is, trade the gap. All right. And I'm gonna teach you how to. Next week we're gonna talk about how to trade the news and how to trade the rumors. We're gonna talk about that next week. But I hope you enjoy the rest of your weekend, and I hope you have learned something. Again, we're gonna continue to go on. I hope you like the Wealthy Wallet Wall Street course as we continue to try to make an impact in the lives of everyone. Again, please subscribe because this information is free. We don't charge anyone for this information, but please subscribe, follow, and like. And I'll see you next week, family. Thanks again for joining.